Welcome to What's Brewing with IAT Insurance Group, where episode after episode we cover the latest marketplace trends with subject matter experts who are fueling our mission to provide insurance answers together. Grab your cup and let's settle in.
Hi, I'm Bobbie Goldie and welcome to What's Brewing. Today's guest is Scott Miller. He's the SVP of IAT's Independent Contractor Division. He's been a guest before, so thank you, Scott, for joining me for another What's Brewing today. But this time, we're doing a podcast. So right now, the economy is pretty crazy in certain industries and so forth. And I know in the trucking industry, which is near and dear to our hearts, the economy is impacting our folks. Do you mind talking a bit about what you're seeing in the economy?
Yeah, Bobbie, and I'm kind of a nerd when it comes to watching the economy and listening to economists relative to trucking. But, I think you look at the past 3 years, it's quite a story. Impact of the pandemic, all the different, we had a little bit of a supply chain issue for a while, et cetera. But when I try to boil it down into just a couple things is, the trucking market is really impacted by three things. One is capacity, number of trucks out there. Two, the number or the volume of goods that need to be moved. And that's been all over the place in the past 3 years. And those two really drive the price or hauling costs, if you will, or revenue that a driver can earn. And that plays havoc on everything. So just a little history of what has happened in the last couple of years is, really during the pandemic, trucking did pretty well from a freight perspective. And really that was driven by, there were a lot of media reports out there that the industry was 90,000 drivers short, et cetera. And at the end of the day, there were stimulus dollars flowing in, so people were spending, albeit in a whole different manner than normal, but goods had to get moved. So what that did with that shortage of drivers is all of a sudden the spot market and contract market rates went through the roof, and that changed the dynamic of drivers. All of a sudden the rates are so high, it's like, well, I haul for a motor carrier right now. I go get my own authority and make a lot of money. Wow. So from about end of 21 through about July, August of 2022, there were like 80,000 additional authorities granted by the FMCSA in the trucking space.
Oh my goodness.
So, in essence, and then you look at the freight volumes during that time, pretty steady. People were still buying stuff. Ports were busy. But all of a sudden, the stimulus money started to dry up. And now spending starts to drop a little bit. Inflation rolls in. Interest rates come up. So all of a sudden, you got a whole different dynamic. You've got too many trucks on the road for a little bit. You got goods kind of starting to bottom out, and all of a sudden spot market rates drop. So now it's a struggle, and add in fuel costs and inflation and interest rates, all that during that time frame. So if you look at, and this has impacted our business pretty substantially, is all of a sudden now the guy that's an independent contractor has his own authority trying to make ends meet. He's hurting. A lot of them are parking their trucks, getting out of the business, et cetera. So, we're kind of, if you look at the authorities from early 2023 to current, it's down about 15,000. So,
wow.
It's kind of it's right sizing the capacity. The other thing I find quite interesting is just the whole goods that need to be moved during this time frame. So, obviously China is a big source of freight. And all of a sudden now the conflict in the Middle East with the Red Sea and the Suez Canal, challenges at the Panama Canal, It used to be California was a, pre-pandemic was really the hot market from a port standpoint. Supply chain issues, a strike that kind of shifted the goods to the East Coast. Now the East Coast can't get China's route to Europe, and the East Coast is blocked somewhat. So now it's going back to the West Coast. So here we go. So if you look at the port volumes in the past few months, all right, Long Beach is up like 110% in the last 2 months. Savannah down 20%. So whole different dynamic. And what we're seeing in our book is, the single guy getting out of the business now, motor carriers, all the indicators are it's kind of starting to bottom out. Capacity is starting to right size, freight volumes. The spending volumes are kind of interesting to look at. We went through, the trend of stimulus dollars driving spending. Now it's debt. So everybody's just putting it on their credit card, and, volumes are actually starting to come up a little bit. Little blip in January because of hard weather. Freight volumes I think tonnage was down 6%, but now all of a sudden you've got, the economists are kind of pointing to the first half of the year being pretty flat, with drivers and freight and all that. So we're, one of the things if the Fed were to lower interest rates, that might stimulate more spending and more capacity. The other thing that's kind of unique is pre-pandemic retailers filled their warehouses, and now it's more of a just-in-time volume. So they aren't stocking, at interest rate and carrying costs, et cetera. They aren't stocking up their warehouses. It's more just-in-time delivery. And then you have some impacts last year, like yellow freight falling by the wayside, big capacity in the LTL market. So you just it feels like things are starting to stabilize, but in a roller coaster at this point.
It definitely sounds like a roller coaster. So with you brought up the independents and, how that industry grew for a while because of where the pandemic took it. And now you're saying that's contracting a bit. Are those independents that are parking their trucks, are they going, working for the larger organization again? Do you see that as an uptick for those companies?
Yeah, we're seeing some move back to an employer or a motor carrier sponsored program where work is more stable. They aren't chasing load boards. I think some are getting out. And then all of a sudden the other dynamic we've got on the independent contractor side is just all this regulatory noise, whether it be Assembly Bill 5 or the Department of Labor regulation that went into effect a couple days ago. Still a lot of uncertainty out there in the independent contractor world. So I think some of them are moving back to motor carriers where, it's more predictable, more stable. A lot of them wanted to be independent contractors, but times are just such that they need some stability.
Definitely. I could see that. I can definitely see that. So when, you talked a lot about, freight and motor carriers. How about, is there any issues on the driver and labor side right now that you're seeing? Or do you feel like because the independents are moving towards the motor carriers that we're in a good spot with drivers?
Well, it feels like given where freight volumes are and, added 80,000 authorities and, lost 20, there's still pretty good capacity in the market. But I think the economics of it are, if I'm an independent contractor paying for my truck, all of a sudden interest rates are higher, fuel costs are higher. What I'm getting per mile is lower. The economics are just pressuring them. So it's, I think it'll settle down over time, but I think we're in for some challenging months coming up.
How about switching gears a bit, still in the commercial transportation area? How about on the housing side? How is that impacting
that's
the transportation industry?
in our book of business with the household good movers, we can track how many we have on a given month, what the trends are. And typically we see there's a seasonality, there's a moving season, and there's the off season. We typically see about 5% of the drivers, cancel or suspend their coverage in the fourth quarter into January, February. But we saw about 10% this year.
Wow.
And I think a lot of that is driven by, you look at the housing market and interest rates and some of the economic data, like January, the housing starts were down 14% year over year. So, inflation and housing prices and interest rates are slowing down. If you're not buying a house, you're not moving.
Yep.
So it's certainly had a slowdown. In talking to some of the movers, they're concerned. They're moving season the last couple of years, even during the pandemic, they were tapped out. They had all the work, and when you have that kind of supply, your pricing's better. So when it's a little thin, you take a little less for a load. But I think the last few weeks we're starting to see some drivers come back. But I think it's just a challenge with the overall housing market and interest rates. People aren't dumping their smaller house with a 3% mortgage for a bigger house at 7%.
Exactly. And there's a shortage of housing, and now the new builds are starting to go up finally because they're not dealing with the supply shortages they were for a while.
Yeah.
I find it interesting on the moving and storage side, which is my part of the business, that we're seeing more and more of those small independents either shutting their doors or being acquired because, again, all the reasons you say, all the costs that are associated with running that business, as well as everything impacting the housing market. It's a pretty interesting time. Now, you brought up a lot of really important factors and stats and where you're seeing the industry being impacted. Do you have any advice to our policyholders or, folks in the trucking industry?
Yeah, I think and obviously I have my insurance hat on here, but, in tough times, a lot of times we find that people will try to cut corners, save $1 here or there, lower their coverage on their truck, et cetera. Maybe on the medical front, cut the corner on having healthcare coverage, et cetera. And I think making sure when times are tough, the catastrophic event can be even exacerbated. So, you total your truck and now all of a sudden you've got 3 deductibles you got to pay, et cetera. And making sure the valuation on your truck is right. Don't cut the corners. That can really, while it might save you $1 today, it can be catastrophic downstream. So, I think we're seeing, during the pandemic, we saw truck values they were going up every month. People were still buying trucks and low interest rates. Now they're trying to get a little extra out of their truck, keep it an extra year or two. So the maintenance is important, safety, et cetera. So stay on top of those things. And, we're actually seeing a lot more activity in our association, which we have some offering for healthcare and dental and vision and those kind of things. People are shopping more on every level, just trying to save a buck. We're seeing some activity there. So I'd say just cutting corners can be short-sighted. So make sure, and I think it's good for drivers to engage with their broker, doing evaluation of your coverages, making sure they're what you really need and what you can stomach in the event of a catastrophic event. So I think it's important to not cut corners. Yeah.
And you mentioned your association. What is that association called?
That's the National Association of Independent Truckers. That's part of our program, and we offer multiple discounts through that, medical, health, life, vision, some discounts on tires and fuel cards and those kind of things. So we use the buying power of the membership, which is around 15,000 drivers, to get better deals for drivers. So, I think it's underutilized, to be honest with you. That there's we have a new web-based app where you can go with the app, see what all is included and available for our members. I think it's easier access for the drivers to know what's available.
And today, with all the prices going up on what these folks are dealing with, anywhere you can get some cost savings, and the support of a good insurance company behind it to support you makes sense. I know what we're seeing a lot of on our side is tire issues, where accidents are caused because we're having the tires are worn out, and it's those sorts of things. Brakes, we're seeing brake issues.
Absolutely.
And those are the types of things that you're right, you can't cut corners on those, because the ramifications of that happening, like you said, the downstream ramifications are so impactful in today's day and age. And even from the claim side, the thing we're seeing with these losses, right, with social inflation and the damages that folks are getting rewarded is just astronomical. So we talked a lot about the industry dynamics. We talked about freight. We talked about the housing industry. You've provided some fabulous advice on what policyholders should keep in mind in the trucking industry right now and where not to cut corners. And you also talked about your association. How can your group at IAT support agents and policyholders? What are some of the things that you offer on your side of the business?
Well, I think, we've introduced some additional bells and whistles to our physical damage product, whether that's downtime or some different contents availabilities. I look at what all's available, and then I think it's good to think about what if I had an accident, what would I be on the hook for? So I think where there's gaps, fill those gaps in, because, and I think the deductible is a perfect example. Typically our physical damage has $1,000 deductible. Well, you know what? You can save some money by going to $2,500, but can you handle that? I mean, those are the questions you got to ask yourself. So, and one other plug I want to give, is relative to, truckers are out there shopping.
Yes.
Understand the promise. Our policy is a contract and a promise to deliver. Bad claim service will cause you big problems. So make sure you understand who you're engaging with and who can deliver and take care of you in the event of an accident. So I will put our claims organization up against any, and I think that is, end of the day, we undersell that, to be honest with you. I think that is paramount to, for a broker of who you place business with, or a motor carrier who you choose to be your provider.
Absolutely. I was going to mention that. And I think also, to add on to that, it's important to also make sure that not only do you have great claim service, but the people are experts on the other side. Our folks are experts in the commercial transportation industry. And that is not your standard auto. So I think, as you mentioned, we are the best in the business. And that's another reason we are, is because we have the experts on the other side that have significant amount of experience in commercial transportation.
Absolutely.
How about for the agents? I know you've mentioned in the past, I think, something about the servicing of these sorts of risks, and how what I love about your team is you seem to go above and beyond. Obviously, with all the offerings you provide and great claims handling, but you seem to go above and beyond for our partner agents as well.
Yeah, and for our agents, honestly, that's one of the things I'm most proud of. whether it be our underwriters and the experience level they have in conversing with a broker with what the right program is. But behind the curtain there is a great account manager staff. We don't use the bullpen approach of, you call 1-800 and, you might get anybody. We align our staff with the motor carrier. So they know you personally, who's going to handle your add, change, delete. And a big difference in our program and a lot of the others is, we do the service. We'll issue the EOCs. We'll take care of all the needs of the motor carrier with the daily contact, et cetera. Then on the billing, we will invoice and do the collections on that side. So there's no agency bill in my program. It's all in my back shop. So, as a broker, once you place business with us, we're going to take care of everything else. And you just help keep the motor carrier happy, and we'll talk to you at renewal. But we pride ourselves in that, and that's led to, 95% retention. So we've got customers who've been with us over 20 years, and that is, you don't keep someone 20 years with crappy service.
Yeah, and what a testament, right? What a testament to have clients over 20 years in the insurance industry. Think about what's happened in the past 20 years, and here you are, being the consistent go-to support for these folks as they're going through such crazy turbulent times. I think, it's a testament to your group, and it's a testament to IAT as a whole, and thinking about us as a specialty carrier, because we're a specialty carrier, we focus on what we're good at, and getting to know our clients and getting to know our agents and going above and beyond. I think, it makes this place pretty special. Once again, Scott, it has been absolutely fabulous speaking to you and spending some time today. I always appreciate your knowledge on the economic side in the industry. I learn a lot, and I hope our audience enjoys a lot of the information you provided, because it was very beneficial for me.
From my perspective, the economics have been fascinating in the last 2 years, and stay tuned because they change every month. But I think we as an organization stay on top of those and try to meet the needs of the customer. So whether it be Assembly Bill 5 or these new regulations, we think we're experts at it, and we'll craft our program and needs for the client in an ever-changing environment. I mean, this is election year, so who knows what tomorrow will bring.
Well, I always say, when you're looking at what's happening in our industry, you say, oh, it's like a 1 in 100 year event. I feel like now they're like 1 in 5 year event, 1 in 2 year event.
Absolutely.
Like, it is evolving quicker than we could even get through some of it. So we may have to have another one of these in 6 months, so we can walk through whatever the dynamics are at that point. So again, thank you, Scott, and thank you all for listening to What's Brewing, and we'll see you next time.
Providing insurance answers together is what we do best. Thanks for tuning in to the latest episode of What's Brewing. Until next time.